Monday, the 17th of August. This is Frontier Opening Bell. I am Bosun Amafaye. Welcome our panelists this morning. Chima Ukadike, who is consumer goods analyst at Vectiva Capital Management. Good morning.
Morning, Bosun.
It's good to see you again. Then Ali Kansacho, the Rich Frontiers Management founder and CEO, is joining us also this morning from Nairobi to London. He's in London today. Thank you so much. It's good to see you at the other side of the Atlantic. Thank you.
Thank you.
Great. Let's hit the ground and look at the equities market for the last trading day of last week, which we're starting effectively the third business and markets week this month. Nigeria's stock market 0.63% on a weekly basis. The Ivorian market finished 0.36%. The Egyptian market at 0.20%. Green. Kenya was down about 0.2%, and the South African GSE 0.60%. I'll take us through the East African market very quickly, and you see the Kenya Central Bank holding its next rate setting meeting the end of September the 29th. Meantime, Stanbic Holdings, one of the largest commercial banks, reported profit negative 36% in the period under review. Investors' appetite for social bonds went up in second quarter, according to Kenya's CMA. Meantime, Uganda's central bank has listed banks with the lowest lending rate during the pandemic period. And over the weekend, Congo DRC made a huge rate hike, 18.5% from 7.5%. They want to re-anchor the country's inflation. Ali.
Yes, good morning, boss, and thank you. So let me start with the Kenyan Central Bank story. We've had a number of rate cuts already, and I think we've run out of road on that front. So investors need to consider that it's going to be difficult from here for the central bank to engineer further rate cuts, and that's something to bear in mind. We've had 3 banking results at the Nairobi Stock Exchange, of which Stanbic was one, KCBA was another, and Co-op Bank was the third. These are all Tier 1 banks. In Stanbic's case, these were better than expected results, in my view, not as deep a pullback as we saw with Kenya Commercial Bank. NPL ratios looked to be better than the industry average, and this is, it's a strong franchise business. So I think, if you are tempted to be looking at Kenyan banks, you've got to look at those which are going to outperform in this very tough and tricky period, and Stanbic might be one of them. Co-op Bank looks like another because of its cooperative account base, which is largely captive. But overall, my takeaway was Stanbic was outperforming the industry average. The Capital Markets Authority comment about social bonds, let them test the market for that. I think that's more public relations than reality. The appetite for securities right now after these dramatic rate cuts is, I don't think, as aggressive as that headline might be indicating personally. Uganda, that's going towards more transparency about bank lending rates. And then, of course, your Congo story. There are not many places in the world where you get an 1,100 basis point rate hike that I can think of. That's really off the scale, boss. But bear in mind 2 things. One is that the Congolese economy is a dollarized economy to a great degree. There's this famous story that goes around that more dollars in the Congo than there are in America. Whether that's true or not, or just a canard, is a different story. But speaks to the point that the majority of the Congolese economy is dollarized. I think what they're trying to do is look to normalize the Congolese franc a little bit more. And if you're going to do that, you're going to have to pay people an attractive rate of interest. We saw this in Kenya at one point. In the 90s, when you jack up interest rates, you create a huge surge into the currency as people get in for the speculative trade, and maybe that's what they're trying to do here. So interesting development. Not many parts of the world, I think, that any of your listeners will be able to tell us that we've seen an 1,100 basis point hike this year.
I don't know where that is on the planet. It was a rude shock over the weekend to see those numbers. Thank you, Ali. The South African guys are having a bit of a less restriction. This morning, President Ramaphosa has released so there could be a few more alcohol consumption and smoking cigarettes to go with it. Well, whatever that means, let's give it a second. Look at the Nigerian market. Early today, Flamis of Nigeria PLC reported its first half earnings revenue 154.5 billion naira. A big story there that I'm sure analysts will be wrapping their heads around. Last week, we got Northern Nigerian Flamis, a contender within the Flamis business. So I'm sure Chima has a few words around that. Meantime, Nigeria Statistics Office adjusted the total labor force figure on Friday, a bit of a contention on social media about what Nigeria's total labor force was for the second quarter, which was reported on Friday. Meantime, 1 o'clock Nigerian time today, July inflation and CPI data out of the Statistics Office. Today is also a big day in Accra. The authorities in Ghana will be handing over the AFCFTA Secretariat to the African Union, a big jump forward to the next January when the AFCFTA is expected to kick off. In the cocoa business, the parliament in Ghana has okayed $1.3 billion for the 2019-2020 season. Cote d'Ivoire is listing new bonds, as you can see. And then the BRVM, one of the listed companies, Tract Afrique Motors, will be paying 159.3 CFA franc as dividend for the full year 2019. Chima, I love the Flamis figure. What does it show very quickly if you put it side by side with Northern Nigerian flour mills?
Thank you very much, Person. Good morning, everyone. So, like you said, flour mills reported their Q1 21 performance results, and it was, we say, quite impressive as well. So, when we look at it in terms of quarter-on-quarter performance, revenue grew about 15% between, year-on-year. Revenue grew about 15% between Q1 21, that is because their year end is quite different. So Q1 21 and Q1 20, which is last year, we're able to grow revenue about 15%. But when you put it side by side with the last quarter results, that's their Q4, their last quarter performance, revenue was only able to grow about 3% because between in 1 year, we've seen that there's been a significant change in terms of border controls, which has helped to drive revenue figures for its sugar business, its agro-allied business, even its pasta business and edible oil business. So we see that the growth is not so spectacular when you compare it with its Q4 performance, but when you look at its Q1 performance, it is quite significant. You can also say the same for Northern Flour Mills. I don't have the figures exactly, but when I looked at the results also seem quite impressive as well. They were able to grow revenues as well. For flour mills, going down to cost of sales, they were not as efficient as they were in the last year. Although gross profits grew about 55%, we saw that for about 55% year on year for Q1. And we saw that when we compared it to quarter on quarter performances, gross profits was only able to grow, cost of sales was only able to decline about 2% year on year, which given their measures to reduce costs, we had expected that they would be able to do a lot better than that. But overall, I think that it was still a very impressive result, because when you go down to bottom line, they were able to increase that by about 30% quarter on quarter, and they were able to increase that by about 4% quarter on quarter. Overall, I think that Flour Mills has done a good job in this quarter. It has ridden on the advantages posed by the border controls, border restrictions placed by the government, and we think that it is poised to do a lot better in the coming quarters.
Okay, a quick one, Chima. Will give us your thoughts on inflation a little bit later. Thank you. Let's touch on with South Africa, where it's all doors are open now to the bar and the joints and the lounges and clubs where you're going to have what you call alcohol, tobacco, and all of that as a big story. The retailer Game, he says, is re-entering the clothing market after exiting for 15 years, and that's where Woolworths says there was a steep half-year profit for 2020. And everyone is trying to get the economy back on track. So the Kingdom of Eswatini is formulating $1.73 billion plan to shore up the economy. Ali.
So firstly, obviously, this was big news out of South Africa. The President Ramaphosa talking about the relaxation, the move to level 2. He spoke confidently, said he thinks we've seen the peak in infections. It must be one big party down there, down south at the moment, because they've been locked down with no alcohol and no cigarettes for weeks and weeks and weeks. And I wonder what's going on. I remember being there for the Football World Cup, and I imagine that the vuvuzelas are blasting and everyone's out and enjoying themselves, and good for them, because
this is level 2 lockdown easing, Ali. So
yeah.
This is going to be a real test whether they go to 1 or they go back to 3.
Correct. So I think, just to reiterate, they have been close to 50 or more % of all the African numbers. The infection went exponential there. And really, what we've learned about the coronavirus is you don't beat it even when you think you've beaten it. Look at what's happening in Europe right now. So I think it's key as to how they manage this situation now.
Ali, a quick one here. There is this company called Novavax says they're starting a trial of the vaccine in South Africa. That's in the news this morning. So maybe from Madagascar to South Africa, maybe somewhere we're going to get this vaccine on the continent.
Well, I don't have much faith in that Madagascar story, the COVID organics, which your health people said is only good for your cough, right? That was your Nigerian Health Commission, which finally put the kibosh on that COVID organics.
We've got a bottle in the museum, by the way.
Interestingly, to your point, the whole vaccine economy has become very interesting, right? We got Putin with his vaccine. We got all kinds being tested. We've got to be a little bit cautious and pour some cold water on this. Let's not get too carried away. These tests are being done on very small control numbers, and we don't know exactly when that vaccine will come out. But to return to your headline stories, JSE, that's interesting. We were talking about that a few weeks ago, talking about the profitability of the Johannesburg Stock Exchange, highly profitable, big volumes, lots of interest. So I can understand why somebody would be targeting a bigger shareholding in that. Then to go to your other stories, SA retailer Game. Game is, its price point is for the mass market. So you'd imagine it would do well. Overall, it's interesting that they're now looking to get back into the clothing market. From what I can see, clothing has gone down because we're all sitting at home, most of us. We don't need to spend a great deal of money on our clothes. That's what I was reading, so I found that interesting.
I'm going to ask Chima. Chima may just disagree with you, but it's okay. Yes, go ahead.
She's always presenting herself very well.
You know the lipstick index by Bloomberg shows that when there's a depression, women tend to spend more on cosmetics than otherwise.
You see, it's all about behavioral economics. That's real value to your watches. Final story, Eswatini formulating $1.73 billion plan to shore up the economy. Look, they've been hit pretty hard, as we know, and it actually, I read the plan, it's pretty coherent, and I think more countries need to have a look at that kind of plan and think to themselves, how do we reignite growth, or how do we put a floor under what we're seeing? Because we talk every day of the week, but really what the numbers are looking like now across the continent is not very pretty. Let me be honest.
I agree with you. Cautious optimism somehow as far as the vaccine is concerned. Only a little bit later, we'll talk about the OPEC joint ministerial meeting is between today and Wednesday. Oil prices rallying on the back of that. Maybe we should just put some. But again, we saw last week OPEC giving its forecast on outlook for the rest of the year, the International Energy Agency as well, and the EIA. So I'll put that together for us in a few minutes. Chima, what's your take on the expected inflation for July for today by the MBS in the afternoon?
Thank you, Basim. So, much like we stated last time, we still see some pressure for inflation coming from food prices, with the border closure and the effect of the pandemic on the agricultural sector, logistics constraints, credit constraints, and all that. We've been seeing some pressure on food prices, and we still expect to see that continue. When we add this to the restriction for FX for corn importation, we expect that we'll see that pressure food prices some more, surely giving the very versatile use of corn in terms of feed for normal food consumption in households, as well as in many consumer goods products. We see that they use them in cereal products, in examples, Golden Mon, cornflakes, and the rest. We should expect to see that in the increased demand, local demand that will now have to make do with the pressure local supply would put some sort of pressure on corn prices. When we add this as well to the deregularization or the kind of increase in PMS prices that we've seen, that has influenced logistics, has influenced transport and cost and regular everyday costs of consumers, we'll see that we also expect that to take an effect in that. And finally, with the FX devaluation, we'll really be able to see the impact of the FX devaluation that we saw sometime around June and early July, where the CBN tried to unify the rates, the NAFEX rates with the has been advised by the IMF. So we should see all these effects come into play in this inflation figure for July. So that's our take for inflation.
So give me a figure here, Chinma.
At the CIVA, our expectation from our economists is at 12.69. I know that the previous figure was 12.56, so we currently expect that it will inch up about 13 bips or so to 12.69.
Great. Thank you very much. Let's squeeze in North African market here, where Egypt is making some big news. But again, you look at the inflation in Egypt, sticking with the inflation story, 4.2% down from 5.6% in the month of June. That came over the weekend. The Egyptian central bank kept overnight deposit rate at 9.25%, overnight lending at 10.25%. The main interest rate, 9.75%, left rates unchanged over the weekend. And the rest of the story there, Ali, I'm sure you can see. You want to speak to Egypt inflation a little bit, yes, and leaving the interest rate?
So let me start with the Egyptian inflation, which is surprisingly benign at 4.2%. And just to give people a spectrum of what's happening, you're at the 12% handle. Ethiopia is north of 23%, where there's serious food inflation. So we're seeing quite a lot of divergence, and Egypt, big population, tends to import a great deal of wheat, primarily from Russia or Ukraine and so forth. So I think it's quite a promising signal for investors looking at the Egyptian market that inflation remains so tame for now, particularly when, as you were saying, the interest rate structure is in this 9 to 11% range. It remains one of the most attractive carry trades globally. The currency has been very well behaved around the 15.90 to 16 range against the dollar. They cut once 300 basis points in the immediate aftermath. They didn't cut again. And, you know, we've spoken about them before. They have a very high degree of sensitivity to international investors. And therefore, your political risk is reduced. It's unlikely you're going to find yourself in a situation which some investors have found themselves in Nigeria, where really they want to get out but are unable to do so. These guys keep that market liquid. They keep the interest rate attractive. And therefore, if I was looking and advising anybody who was looking around the continent, to me, the best risk-adjusted trade today on our continent is to be long the Egyptian currency, running the carry, funding yourself in US dollars. And this was the favorite trade of investors globally in 2016 and 2017, and I've seen no reason to change that strategy. I think that really is a trade of the year, as far as I can see. Activity at the Egyptian capital markets, you were talking about two stories there, will continue. This is a reasonably sophisticated market, and I think you'll continue to see developments. And of course, the big geopolitical development was this rapprochement between the UAE and Israel. And bear in mind that Egypt falls very much into the UAE camp as well. And this is something that folks should be considering in terms of considering how the pieces of the puzzle, particularly the geopolitical pieces, are falling at the moment. And Egypt seems to be able to navigate that reasonably well. Libya seems to be on hold for now. We don't know exactly if there have been any major developments. Maybe it's in a bit of a stalemate. But overall, as I said, that Egyptian carry trade for me is the trade to do today in Africa.
Interesting. We're going to be wrapping up on this particular story that today the Ghanaian authorities will be handing over the AFCFTA headquarters or secretariat in Accra to the African Union. This is one big step forward for the AFCFTA new deadline of implementation of January 1st, 2021. Chinma, what's your take on this development today? Do you see this? How quickly the Ghanaian authorities are able to put this secretariat together and to get the AFCFTA up and running within the next 6 months?
I think that this is a very welcome development, given the halts that had to be put in place because of the COVID-19 pandemic. The AFCFTA is a very, very good development for all parts, for many parties involved, introducing increased trading activities across African countries. So the fact that they are able to come up with a much closer deadline instead of the kind of indefinite, there was no real updates before now. So the fact that they've been able to come up with a real tangible date that we can look to and see that something may be happening around January 2021, something to look forward to, something positive, we think. And looking at the positives for Nigeria, it will open us to a lot more increased trade partnership with the rest of the world, the rest of Africa, for example. However, we still need to, for Nigeria, for example, we still need some there are so many things that we still need to put in place. For one, we need better infrastructure because this AFCFTA speaks specifically to the improvement of the manufacturing sector. So we need to help that sector improve so that we have a better position, a better advantage to take advantage of the advantage that, or the opportunities that the AFCFTA provides. And with the current ease of doing business for manufacturing sectors, with the FX problems, with the supply chain problems, with the high cost of production, all these do not really place us in a better position to be competitive in the global market. So I think that we still have some work to do. For general AFCFTA, I think it's a good one, but I think that we need to step up the pace in terms of Nigeria's readiness for the AFCFTA.
We need to. A whole lot of housekeeping needs to be done by Nigeria. Ali, it's a big day today in Accra. Yes.
So you look, my view on this is that I'm an evangelist with this free trade agreement. I think there is so much low-hanging fruit. I understand some fears countries have, and sometimes I hear that from places like Nigeria. Forget the fear. This is the marketplace where we can trade with each other. We can unleash our entrepreneurs to trade across a borderless continent. And now it's not a question of we've got to accelerate this thing. We've got enough challenges with our normal markets. Let's grow this market. It has a huge opportunity for everybody. And I'm really excited by it. And I hope our policymakers now get their skates on and get going and open the thing up. Because once you open it up, you're going to see huge growth. I can guarantee you. And people are overly worried. There are lots of privileged people who are doing well because of this Africa full of borders. They're the ones who are going to lose out. We've just got to move on now, and they've got to lose because that's the way it is.
That's the way it is. That's just the way it is. A very shortened way to put it. On the EFCFTA, a big day today in Accra, opening up the EFCFTA Secretariat, a major milestone moving forward there. And of course, congratulations to them in Accra under the presidency of President Nana Akufo-Addo to get the Secretariat up and running on time, approved by the Parliament. They funded it, and now they're going to hand over the keys to the African Union officials. Thank you so much, Ali Kansacho of Rich Frontiers Management. Have a great day and week ahead. And Chima Ukadike of Vetiva Capital Management, thank you so much as well. We'll see you again tomorrow. Bye for now.